Good afternoon, good morning. First of all, thank you for the opportunity to present our analysis. So, over the past weeks, we conduct in a deep financial and treasury assessment on Zschimmer Schwarz data, focusing on operational efficiency, liquidity, and sustainability. Our goal is simple yet impactful to help the company transform financial challenge into strategic advantages, strengthening your position in a competitive and evolving chemical market.
With the financial statements we received from the company, we could see that although there was a good recovery in 2024, there was a major decline in 2023 in income and profitability, and this may be because of administrative mismanagement, tax losses, and weak debt policies. Now, our objective is to stabilize finances through cost reduction, improve liquidity, and surplus cash investments. Our key insight is to need to have new administration with stronger financial controls, cost-saving initiatives, and focus on sustainable growth. And also, finally, focus ahead on strength liquidity, optimize cash use, and stabilize financial structure. With the operational map, we can see how the company carries the order through the production, logistics, and delivery. And we guided ourselves through the one that's already in the webpage, which shows that they have a very clear organizational structure. And this is important to understand and target possible opportunities.
In our financial deep dive, we identified three key aspects in the performance of the company. So, first one, in 2022, that was a strong year, but with healthy and sales and profitability. But in 2023, it declined in the net income due to tax losses, high cost, and administrative disruptions. But what's really remarkable is how the new administration turned the ship around 2024. The gross profit rose, costs were better managed, and the net margins bounced back to 6.71%. Now, for the current ratio, stay healthy about 1. That is a good sign of short-term stability. That AC ratio fell to 1.15, signaling rising dependency on inventory. While this isn't alarming because similarly, the ROA and ROE were near to zero in 2023, but so you're surged in 2024. So it confirms the positive momentum. Now, this data tell us a clearly story about Zschimmer Schwarz, how it demonstrates resilience now with higher control over the cost and a clear tax strategy, and also a focus on cash optimizations. The company is well positioned, not just recover, but to lead.
From the analysis, we found a couple key challenges that could be affecting the company's treasury and their overall performance. First of all, they lack of proper currency hedging, which is exposing them to foreign exchange volatility, since they work with 3 different currencies. Then, the asset ratio dropped in 2024 in their KPIs, showing increased reliance on inventory to cover short-term debt. Lastly, there was a sharp drop in the net cash flow and income in 2023, and inconsistent monthly inflows, which indicate weak forecasting. From this, we have certain recommendations. First of all, we suggest them to optimize the client collections with early payment discounts and improve credit policies for their clients, boosting liquidity and reducing money tied up in receivables, which will end up giving a better cash flow overall. Then we found in the financial analysis that they have a surplus of $9 million, which they aren't getting much return on. So we found the best option for them, which is to get CETES for short-term or long-term that have safe returns above inflation rate with daily liquidity. And lastly, we suggest them to implement foreign exchange hedging, for example, forward contracts, and this would reduce foreign exchange volatility, risk, and stabilize costs and revenues for them so they don't have any major losses with the ups and downs that the market is having right now.
And now with the forecast and impact, the expected cash for the next year will be an 18% growth mentioned by the accountant Herrera. Some facts about the industry in the next year. According to Statista, the chemical industry in Mexico is projected to experience a moderate growth, reaching $8.26 billion, with a compound annual growth of 1.32%. The expected growth of the company seems to be unrealistic for us, considering the past years and how the industry is going to go. But with this information and with this percentage, the expected revenue will be 10.9 million. But this generates an ethical concern for us as a team, since we don't know future strategies of investment and finance. So we don't know if the information will be precise. But we hope that they can achieve this, as they have made remarkable progress and a quick recovery under the new administration. And I would like to end with a quote: investment in knowledge pays the best interest, by Benjamin Franklin. Thank you very much.